The views expressed in this podcast are those of the panelists and do not necessarily reflect the views of U.S. Money Reserve.
Welcome to America's Gold Authority podcast. I'm your host, Mike Barnes, and joining me today we have Ed Moy, the 38th Director of the United States Mint. Ed, it is so great to have you here.
Thanks for that introduction, Mike.
Of course. We also have Brad Chastain. He's the Vice President of Retirement Education here at U.S. Money Reserve. Glad to have you here.
Great to be here. Thank you.
We have lots to talk about. We have a great topic lined up today. We're going to be talking about the future of gold, digital currency, and retirement planning. Brad, I want to start with you. The rise of, well, they call it the CBDC. It's the central bank digital currency. Concerns about that? Is there anything to be worried about as a consumer?
There are quite a few concerns that people have addressed or people have brought up. Ultimately, a central bank digital currency would be a new form of currency issued directly from a central bank, so different than cryptocurrencies that are widely spread and people are familiar with now, but it could theoretically replace the forms of money that we use today.
Yeah.
And there are some advantages that they see from a clearing and settlement perspective to make things instantaneous and transparent. A lot of customers we hear from have a lot of concerns specifically around the privacy of it, that the government would have a tremendous amount of insight into our financial transactions in a way that they don't have as much right now with it being more decentralized across the banking system. But right now, at least here in the United States, the idea is on pause. President Trump did sign an executive order soon upon entering office that prohibits the use and even the development of a CBDC here in the United States for the time being.
Okay.
It is an executive order, so of course it doesn't require congressional approval to overturn. Any future administration could change that, but right now it's on hold. But it is being looked at quite a bit throughout the world in other countries.
Ed, as the former director of the United States Mint, you hear new currency. What is your first thought?
Well, like most Americans, your ears kind of perk up because you think something bad's going to happen. And really, it's a mixture of a lot of things, just like any technology can be used for good or bad. As countries pursue this central bank digital currency idea, all it means is the European Union will still be issuing euros, but it'll be done purely on an electronic form, and you won't need a bank to hold it, for example. We've already doing things like that here with Cash App and a number of other ways of going about it. But why countries start looking at this is there are advantages. If you look at the good intentions of a country, there are some advantages of doing that. Many countries have a large proportion of their population, even here in the United States, of unbanked. If they're unbanked, they don't have a bank account, which means they don't have a checking account, which means they don't have a credit card. And those are significant hurdles to overcome in order to come into the modern economy. Central bank digital currencies can help with that. They can also help with the government managing the economy. Now, I know a lot of people think the economy can't be managed or the government's management is not good or bad. Regardless of what you think about that, for example, one key indicator of how an economy is doing is the velocity of money. How many times a dollar bill changes hands? Well, right now, they'll do a study, a survey that is 0.0000001% of all the transactions out there. And from that, they're projecting what 100% of the transactions look like.
Yeah.
Central bank digital currency, you won't have that problem. You'll know exactly. Right? So those are some good things. But along with the good things, you have to accept that there are some vulnerabilities in the system of which countries like China are beginning to exploit. So China is the furthest major country that's been developing a central bank digital currency, and they're doing it for all the reasons we just talked about, but they're also doing it to monitor their citizens. China is very concerned with internal security, and through different surveillance techniques that they use, it's the largest surveillance state, And the area that they have least amount of transparency in is how people spend their money.
Yeah.
If you go to a central bank digital currency, which they are, and they've experimented with their four large cities, and it seems to be working, they now know how you're spending your money, whether you're paying your taxes, and they can confiscate that money. They can use how you spend your money to determine what interest rate you get on a mortgage or whether you even get a mortgage. And that's what Americans are concerned about.
Yeah. To me, if it boils down to one word, it's change. And trying to get used to that change. If you think about our grandfathers getting used to credit cards as opposed to paying in cash, our fathers getting used to debit cards or even Venmo or something like that as opposed to credit cards. And the financial world is always changing. Is it something that we just need to accept and be ready for, or do we need to guard against it?
I think there's no question we have to be able to adapt to change, especially with the financial system that changes so rapidly. Yeah, it seems like the financial system we're playing today is always ahead of regulators, in fact, in terms of its development. But it's something you definitely don't want to just go into blind. You want to understand, and you want to take whatever precautions are necessary, given whatever that change is, to make sure that you are protected.
Yeah. Being protected is the key.
Yeah. Now, I will say that China can do it relatively quickly because of their authoritarian government and because of how relatively unsophisticated their economy is. When you take a look at the United States, particularly the fact that the entire world uses the U.S. dollar as its trading currency, the United States can't move into this quickly. And so as a result, when I was director of the Mint, I knew the Federal Reserve had several different research projects that were going on. But any movement toward implementing a digital currency for something as important as the U.S. dollar is going to take a while because it has to be done right.
Yeah.
Now, saying that, there's a lot of concern out there. And I think two interesting parts of that concern are, number one, the growth of private sector cryptocurrencies like Bitcoin. And on the other end, the return of gold as some form of currency. What a lot of people don't know, and this is kind of a surprise fact, is that in the United States, there are up to 14 states right now that are exploring a little known part of the Constitution, Article 1, Section 10, which allows states to settle their debts in gold and silver. So so what we've seen is tremendous growth in our U.S. dollar, our fiat currency, coupled with central bank digital currencies, have gotten people concerned that they don't want all the eggs in one basket. And you're seeing these offshoots of cryptocurrency on one side and a return to gold on the other side. And I think that has resulted in the popularity of gold now as an asset and the record prices that we see right now.
Because it's two opposite ends of the spectrum in so many ways. And you've both have mentioned cryptocurrency, which I think a lot of people understand. Some people are still very confused about. It's very profitable for some, very volatile for others. What's the deal? How should we look at cryptocurrency?
Yeah, it's volatile for everyone. But early adopters have definitely minted a fortune there. But it is extraordinarily volatile. In fact, we were looking at it a while ago. If you look at the return profile for Bitcoin being the main one, for example, the first, big bull market that it returned, tens of thousands of percent return. It was just astronomical. But then it's had about 80% drawdowns in price. And so in each subsequent bull market has not been nearly what the previous ones were. In fact, in percent, it's about 80% less. So, and not just 80%, like returning 100, returning 20, it's 80% of what the previous percentage return was. So it's much, much lower. And so you see this sort of parabolic curve. And we're now to the point where if you actually got another 80% drawdown in the Bitcoin price, if there were the next bull market return was 80% less than the previous one, it wouldn't even get back to break even. Yeah. That's how it's kind of sort of taken that trajectory over time. And now likely one of those trends is going to break. Either no more 80% drawdowns or the returns are not going to decline that much. Nobody ultimately knows, but it is extraordinarily volatile. And because of the volatility, even financial institutions, I use BlackRock as an example, who are pushing for it. They have an ETF, the largest ETF that holds Bitcoin, and are advising people to hold some in crypto like that. They're advising only no more than 3% of an entire portfolio because of that volatility.
Wow.
Because you think if it has an 80% drawdown, that's about 1.2% of an entire portfolio there, because they're really, even though they're incentivized to push it, they're also recognize the risks that are inherent with it.
Does it affect people at the U.S. Mint?
It really doesn't, because the mint produces primarily circulating coins.
Right.
And the number of transactions that use cryptocurrency is virtually infinitesimally small compared to the US dollar. And so there's really no concern that people are using Bitcoin instead of the US dollar in order to buy pizzas.
Okay.
Right? But at the same time, what was intriguing when I was at the Mint, and that was when the Satoshi white paper came out, was just the idea that instead of using the existing financial highways for dollar transactions, you could have a technology through advanced cryptography that would make that currency more secure in its transaction. So right now, Bitcoin has never been hacked. Now, the banks or the wallets that held Bitcoin have been hacked, but the Bitcoin itself has not been compromised. And so the intent is for this to become a very secure currency, but right now it is devolved to a speculative investment. And that's what Brad and Blackstone and others have all come to the conclusion is it's volatile. We can make money on the ups and downs by longing it and shorting it, but by no means is this going to be used for everyday transactions.
But you mentioned the word hack, and I think because of technology, that's become a common phrase for so many people to use. And because of that, when you're talking about the growing dependence on technology and something like crypto, do we need to worry more about cybercrime, about AI, about more hacks?
So there's this famous story during the Depression where they caught this bank robber, and the bank robber wasn't particularly educated, and the police said, you've broken and stolen money from like 20 banks. Why do you rob banks? And he looks at him and goes, "Why, that's where the money is." So you're going to see a dramatic increase in cybercrime because more and more of our transactions are done electronically. And for the criminal, it's very efficient to try to figure out ways to steal money electronically.
Sure. But do I, as the consumer, have to worry about that?
Certainly something to be concerned about. Whether it's just an outright scam. I mean, we saw just through outright fraud every year now, we're about $24.5 billion or so that's being taken just through outright fraud. And with new technologies like artificial intelligence that can mimic voices and throw websites up that look like the real thing so quickly, you can expect that's going to rise. But also, to Ed's point, the exchanges that cryptocurrency have been vulnerable. Bybit was a big one not too long ago, and these were very sophisticated people running the exchange who were keeping the custody wallets for the exchange offline. The private keys were completely offline, could not be hacked in any way because they were stored not via any accessible channel from the internet. But the hackers ultimately tricked them into moving the currency on. It looked like a normal transaction for them to move the currency into one of their online, or what they call hot wallets, and they can then transact with. And it took 3 different people within that exchange who are very sophisticated, know how to hold and custody cryptocurrency, 3 different people to sign that transaction. So they all got tricked into signing a fraudulent transaction that changed the code that then allowed the hackers to get access to the hot wallet that they moved to. So it looked like a legitimate transaction. And these were the experts that got tricked. So for the everyday person to be able to hold and custody that and do it in a way that could easily be passed on to heirs is pretty tricky. I imagine a lot of cryptocurrency is going to be lost in the years ahead because there's no customer service to call if you lose your private keys that are offline. A point in the security that Ed talked about with the blockchain itself is that nobody can change it. And so if you've lost access to that and haven't had plans in place to pass it along properly, it's gone forever.
Yeah, I feel like I just heard the plot of a hit movie, the way that's played out. But so many of us try to be conservative with our money, with our retirement money. And as we're looking 20, 30, 40 years down the road, is it so much of a safer move to say, I'm going to invest in gold? I'm not going to worry about this very volatile cryptocurrency or anything like that.
Yes, it's hard to predict the future, especially given a long timeline like that, right? And so what you do is try to figure out what are your possible vulnerabilities, and you diversify your portfolio to address those potential vulnerabilities. For me, one of the areas, and when people find out I'm mint director, I'm always asked, so what do you think about gold? Well, obviously being the mint director and being the world's premier maker of gold bullion, I have kind of a bias, but I also stand back and say, why has the Mint's bullion program increased by 700%? Right? Well, it's just not because of a bias out there. It's because people are taking a look at how volatile and unpredictable our world is getting, and not knowing where it's all going to end when they eventually need to have money, and they're diversifying their portfolios. And one area that they had not previously thought of has been alternate assets, which gold, silver, and other precious metals might be. And so from a retirement perspective, it really makes sense to have gold in your portfolio, because gold performs great over the long term. If you're looking for the day-to-day fluctuation, if you want to make $50 on an ounce of gold by buying it today and selling it tomorrow, that's one thing. But if you're taking a look at where's it going to be in 25 years, the performance of gold has been steady over longer periods of time.
So if for whatever reason you're attracted to cryptocurrency or anything like that, you might want to talk to someone and you might want to take that risk, but diversify and have something like gold in that portfolio as well.
Yeah, and diversification is absolutely critical. And I think one of the reasons why so many people are interested in that, it's not just the riches aspect. There's people that hardcore believe in the cryptocurrency space. And a big part of it is the reason why we also advocate gold is so important. It is a mistrust of the monetary system, the view that things are changing, that the way that money has worked in the past in terms of the US dollar's relationship to the world, or the world's relationship to the US dollar may be a better way to put it, that the world is seeking alternatives because it keeps presenting problems. There hasn't been a viable alternative, which has kept the world very much dependent upon dollars. And so people are looking at that as one of those avenues, but it just highlights the risks that are ahead with the financial and monetary system and global order. And that's also why so much more attention is being paid to gold than was even 15, 20 years ago, for that matter.
Yeah. So it's interesting. Someone said, well, Ed, how are you, how can you say that? Because the US dollar is still highly valued and very expensive compared to every other country's currencies. And the best way I've heard to explain that is it is the cleanest shirt in the dirty shirt hamper. So they're all having trouble, but compared to everybody
great
else,
analogy.
It's having less problems. And then when you take a look at gold separately, there's where you see the long-term gain in gold.
Yeah. Well, you guys know how to clean these shirts completely. And
you can't rely on what's in the dirty shirt hamper. You have to have some alternatives.
Exactly. It's kind of strange to think about because they've been around for so long. But Ed, some people think of gold and silver as alternative assets. What's the deal there?
Yeah, really good question. I think it comes from two places. One is from a financial perspective. Alternative assets are assets that have different relationships with each other, different correlations that aren't part of standard correlations. So that's complicated language of saying, when you look at the relationship between dollars and the stock market and bonds, when one goes down, the other goes up, and the other goes down, those are very standard relationships. And when you have a catalyst that makes it do that, you have other assets that behave differently. And so the reason why that's an important financial concept is it really makes the case for diversification. And the thing is, when people think about their investments, particularly toward retirement, they think cash, stocks, and bonds. Pretty much combinations of that. And those three assets have very established correlations with each other. The problem is when they're all down, not many go up. And so what you want is an asset along with that when these are having trouble, or when most of these are having trouble, this one's doing good. And that's what a financial term for alternative asset is.
Okay.
Now, a more common definition of alternative asset is something that you just don't think a lot about.
Sure.
And for many people, and mostly people in my generation and younger, they've never experienced gold before. They've lived completely in a world where the United States dollar has been king of the world. And so when you talk about gold, they're going like, I use that in jewelry, but they never think of owning gold as a part of their strategy. But when you talk to my parents' generation, and they grew up where gold backed people's currencies, they understand that. And so when you talk to your grandparents or great-grandparents, they will tell you stories about how important gold was in their life. And that's just something that we've lost over time because it's not as common anymore. So to just give you one example, this is a $2.50 U.S. gold piece. It's in Indian.
$2.50.
Yeah, $2.50. And it comes with a bracket and something that went around a bracelet.
Yeah.
So this is for my mom's bracelet. So she grew up in an era where not only did gold back money, gold was an everyday part of life. And when she got married, her father-in-law gave her a 24-karat gold bracelet with 10 $2.50 pieces on it, and a 24-karat gold necklace with 10 $5 gold pieces on it. And for the Western mind, you would think he must have really loved her, welcomed her into the family. From a Chinese mind, what he was saying is, I lived through the fall of Imperial China and the rise of the warlords, to watch the warlords be defeated by the nationalists, to watch the nationalists being invaded by China, then to watch the communists get rid of the nationalists. And all through that, we've had an unstable country with unstable banking system, with unstable currencies. And he was saying, when you marry my son, I want enough money around your wrist and your neck that if you had to run out of the house because of a Japanese attack, you would have enough money to keep my family line going.
Wow.
Right? This is the rest of the world. Not so much in the United States, although some of us have parents or relatives from the Great Depression that will remember this and will tell you a very similar story. But this is why China and India are big gold buyers, because both those countries come from very poor beginnings, have gone through a tremendous amount of turmoil to get to where they are now, and they view gold as a good alternative to having all their money in a country's currency.
Which is hard for some of us to remember because we're so used to living here, the United States, whatever the economy has been for so long.
Yep.
It's different in other parts of the world.
Yep. Yeah.
Thank you so much for joining us today. Thank you both.
Yeah. Great to be here.
Yeah. Well, that's all the time we have now for today's episode of America's Gold Authority podcast. On behalf of all of us here in the U.S. Money Reserve Studios, thank you for tuning in. If you have any questions or want to learn more about today's episode, call the good people at U.S. Money Reserve at the number in the description below. They're going to be very happy to answer your questions about precious metals and the strategic role they play in achieving a secure and comfortable financial future. Again, my name is Mike Barnes, and we will see you next time on America's Gold Authority podcast.
The markets for coins are unregulated. Prices can rise or fall and carry some risks. The company is not affiliated with the U.S. government or the U.S. Mint. Past performance of the coin or the market cannot predict future performance. All calls recorded for quality assurance. Offer void where prohibited.